Today we're going to discuss some of the best known and common trading indicators along with some tips and tricks to level up your trading game. So let's get started. Welcome to Crypto by Sire. In this channel, I recommend some of the underrated cryptocurrencies for life-changing gains. So if you love making money and cryptocurrencies, make sure to hit the like and subscribe button. Also, make sure to hit the bell icon so you're currently updated with my videos. Now remember, the giveaway for 1,000 MEX tokens is still live. All you have to do is like the video, subscribe to the channel, comment down below, and follow the rest of the steps in the video description. So first of all, and the most important thing is to look at the time frame of your preference. So if you're more of a long-term trader, then you should look at daily charts, 4-hour charts, right? Or even weekly. But if you're more of a swing trader, then you'll look at 4-hour, 1 hour, 15 minutes, whatever works the way you trade. So time frame is the number one thing that allows you to look at any particular commodity. So for a long trend, like if you want to find a trend of a chart at this particular frame of reference, you will, for example, pull up a 1-day chart. Let's say I have an Ethereum chart in front of me. By the way, if you're wondering what are these levels, these red lines and green lines, they are acting as support and resistances. Like the red lines are resistances. These are some of the levels that you can aim to get towards. And green lines are some of the levels that you'll expect to buy or bounce the price from off. And if you don't know what exactly are they or how to draw them, you can follow my previous video that's going to be floating somewhere here. I want to show a trend to you. So let's say I pick a frame of reference starting from here till here. So just to demonstrate what's happening here. So let's say you're in some time zone here. You're looking at the chart here. You don't know whatever happened in the future. But looking at this point in time, you'll see that it's an upward trend. An indication of an upward trend is based on higher highs and higher lows. So this is a higher low, higher low, higher high, higher high, higher high, higher high, higher low. So, and this continuation. So on a daily trend and this frame of reference in this rectangle, you're seeing that it's an upward trend. And you just jump in your frame of reference, right? You don't have to time the market. We'll cover that in trend lines, but remember that first of all, you need to pull up a higher trend frame and follow the trend. You don't want to go against the trend when you're trading, whether it's spot, whether it's future. You should know the long-term trend. And then if we extend this frame of reference from here to here, let's say, right? And this smaller triangle we have right now, so it's a bit uncertain at the moment what's happening here, but it was pretty clear that it was a downward trend. It was a series of lower highs, lower lows. This was a higher low, but then another lower low. This is lower high, lower high, lower high, lower low, right? But it's a bit tricky here. So we're going to move to the second part of our indicators, which is trend line. Now, trend line sounds very simple, but it's very important to know and sets up your baseline setup, sets up your trends more clearly than just following the price, right? So let's build a trend line. So first of all, we saw this trend line coming up here, and then it got invalidated here. So let's remove that. Then there was this trend line that got up here, and then this was broken by this price action here. So that gets invalidated. Then we have this trend line from here, which is the same as the previous one. So we're gonna not look at that and instead follow this candle and draw this trend line. So currently you're saying that it's still following a downward trend, and it's much clearer now by following a trend line. And it was not clear just by a naked look of your eye, right? So it's very important to set up these trend lines to know where are you going towards. Now I'll follow along this trend line, another trend line which is much higher on the time frame, and you're gonna see that there's still a very long trend coming up with a daily chart. Like we're following a very long upward trend. But currently we're seeing a downward trend, which is the current price action. But in long term, we're still going upwards. Okay, so this is very important in my opinion. Like you start off from trend lines, and it just helps you guide on which trends are we going towards and on what time frame. One of the tricks that can help you along with trend lines is waiting for an engulfing type of pattern. So, for example, you have this first of all a bearish candle, which opened up high, closed low, and then one or two candles, or even more, bullish candle that kind of surpass that magnitude of the bearish candle. So, this is some sort of engulfing pattern, right? So, one bullish candle engulfing the previous one that indicates kind of a reversal in whatever time frame. It could be a smaller reversal, it could be a higher reversal, but you could use your trend lines and this engulfing pattern to help you decide on when should you buy. You shouldn't be just buying on the trend line. You should always be waiting for some confirmations like engulfing pattern, right? And when you see that it has been engulfed, then you can kind of safely say by one candle or two that if it's a higher time frame candle, then it's even better, and you can jump in. So this is another trick that you can use in your trading game. Okay, moving over to another trading indicator, which is moving averages. Now, moving averages are of different types, and you are open to explore on your own. So, for example, I'm just going to use an exponential moving average. It is just based on the previous prices being averaged out exponentially. So there's a formula that's been applied with respect to exponential type of moving average. There's also MA, there's also SMA. You can also look into it, but the idea is that they kind of tell you where exactly is the graph going. Is it consolidating? Is it going up or is it going down? Right. So, for example, here, if I kind of clean this chart here, let's delete this rectangle, and yeah, you'll see that the EMAs are all in the daily chart very high. They are kind of acting as resistances, right? And it's somewhat telling you that the chart is kind of declining. It's on a downward trend, but it's going to be a totally different game in a different time frame, right? Maybe in a 4 hour chart, it's like it's acting as support, and in a 1 hour chart, maybe it's totally a different game. Like here, it's 1 hour in the 1 hour chart, every EMA is acting as a support, right? So you have to look into multiple time frames, multiple EMAs, whatever suits you, whatever works for you best. You have to kind of figure it out. So for middle ranges, 50 EMA or MA is good. And for higher time frames or higher indicators, more robust indicators, you can use 100, 200 MA or EMA. For short term, you can just use 25 or 20 EMA or MA, right? So that's pretty much it on moving averages that you can use to guide alongside other technical indicators. Let's move on to another common and most frequent that at least I use in my trading strategy is Bollinger Bands. So let's open up the daily again and reposition the chart and apply Bollinger Bands. Okay, so the Bollinger Band here kind of tells you somewhat of a price range on any given time frame. So you could use multiple time frames, let's say 4 hour and 1 hour, right? So you could use 4 hour middle and a 1 hour low to set up a okayish buy signal, right? Along with maybe RSI. We'll cover RSI in a minute, but in Bollinger Bands, you kind of get the idea of where exactly the commodity is. Is it on a lower time frame, uh, a lower price action, sorry, or is it on a higher price movement, right? Is it on the middle Bollinger Bands, higher or lower? So it kind of gives you three levels on any particular time frame we're looking at, and you can position yourself into multiple time frames to decide your entry. So, for example, in a daily, we have this at the low, which is around 1830. So it's around 1800 and 1900 on the daily, but it's going to be a totally different game in 4 hour, right? In 4 hour, it's on a high, right? So on one day and 4 hour, it's totally different game. You might like to wait for the 4 hour to come somewhere in the middle around 1800, 60, 1870, right? Or 1840, 50. So you could decide, or if you're just trading short term, then you can think of 4 hour and 1 hour. You make a combination of that, right? And in that, they're both on a higher time frame. Like you're, so this is particularly not the right place to make a move. You might need to wait, right? So this kind of helps you decide, along with other trading indicators, that where are we exactly in the range. Following into this, the last thing I want to cover is RSI. So it pairs really beautifully with Bollinger Bands. So Bollinger Bands gives you that range, and if you want to like get that confirmation, you can get it by RSI. The RSI means either a commodity is oversold, overbought, or undersold, or overly sold, right? So if it's above 70 or 80, it's overbought. Above 90, very much overbought. And under 30 is oversold. Under 20, under 10, perfect to enter, right? However, these are numbers, right? You have to make sure you're following charts, following trends, just not buying into RSI. So, for example, the Bollinger Bands on, let's say, 4 hour is on the middle, but on the 1 hour, it's on the lower. And the RSI on the 1 hour is also like around 30 or below. Then all you need to do is just test the 4 hour middle, right? If it bounces off from that, just take it, right? And take it only when the direction is upward, right? So make sure you first of all do that time frame and trend check. Then, like one of my strategies is to pull up multiple time frames, see the Bollinger Bands and RSI, along with my trend lines, support resistances, all that combined that makes you a perfect information on where are we going towards, and did it do a test, did it do some engulfing pattern, and then follow that to another resistance, for example, right? If you're trading short, or short, by short I mean like in a short time frame, just follow that signal, right? You saw an engulfing pattern, you saw a bounce back from the 4 hour middle Bollinger, you saw RSI on a 1 hour very below 30. Everything just worked out. Everything just gave you a sign on an upward trend, for example, that it's a perfect buy. So this is just one example of when should you position yourself and how should you position yourself into trades. So in a nutshell, these are all the common trading indicators that I somewhat stumble upon and mostly use, especially Bollinger Bands and RSI. Like these are one of the best combinations, at least in my opinion, and multiple time frames. Like these three, you look at multiple time frames, trends, set up your support resistances, look at Bollinger Bands, look at moving averages for more guidance, and RSI, for example, to finally hit that needle into the target, right? And then follow your other support and resistances to help you decide your risk management and take profit targets. So I think that's pretty much it on what I wanted to give as an introduction for the beginners out there who are trying to look into trading and not sure what to look at. What should they use to confirm their suspicions or intuitions, right? So these are some of the technical indicators that are pretty commonly used and they're pretty best known to work, right? And personally, I use most of them, right? And yeah, let me know if this was helpful for you. Any other indicators that you would want to look like? I know a couple that I could cover in other videos, but let me know if there's any particular indicator that you want me to cover. And was this helpful at all? Let me know in the comments. All right. So that's pretty much it from this video. Make sure to hit a like and subscribe. Let me know in the comments, and I'll see you in the next one.